Good afternoon. This is Brad Dennis with BIS Commodities with your market wrap up for the first week of February. For the week, looking at corn up 4.5 cents basis the March, beans down 7, wheat up 6. So a little bit firmness in corn, beans off a little bit, wheat up. Looking at the corn market. Corn market most recently has made some technical achievements to the upside. We've taken out some moving averages and we've been able to get it to trade into that 60 to 65 level basis the March. There though, we're starting to run out of steam. What we're seeing is we're seeing funds cover their short positions by the price being above these technical levels, covering their short positions, and that's given us a little oomph to the upside. The only problem is it's been met by a lot of selling. Guys have been waiting to price their corn, stuff that's in the bin, such and such. They've been waiting to sell, and there's so much corn out there to sell that it has caused that upward momentum to stall. Now, looking at the Commitment of Traders report today, we see that for the week of January 23rd to January 30th, the fund bought back 90,000 contracts. So he went from a 220 short down to a 130 short. And basically, the corn market basis the March traded in a 13-cent range. That was our short covering rally. It looks like this corn market is going to be a steady to consolidating type of trade going forward unless there is a need to cover those remaining shorts in a short amount of time. Right now, we don't see that. On the positive note, we are selling a lot of corn. Demand is there, and we are seeing corn being bought via exports, and that is going to make us hit that level that the government believes we should be exporting. So that's a positive. Balance sheet isn't going to be changed anytime soon. We're seeing that demand. We just don't want the corn market to become the wheat market, in that the wheat market had too much of a rally and now has priced itself out of the market. Corn's still fairly priced, so we should see the demand. It's just we've got this overhang of cash corn that keeps getting sold into it because there is so much out of there. Over in the bean market, beans are really playing the weather market down in South America. Argentina is the area that's noted to be dry. Brazil, we're wondering if it's going to get too wet down the road. So there's some questions about it. I'd say that the Argentine situation is definitely of a higher level than the Brazilian situation. The Brazilian situation might be nothing, and it might actually be that the beans are so good in Brazil that they make up for any kind of losses in Argentina. What we're seeing though is we're seeing these forecasts, the 1 to 5 day, the 6 to 10 day, and the 10 to 14 day. You keep pulling these rain systems forward, so you're getting better and better confidence with these rain scenarios or rain forecasts. In the next 1 to 5 days, there's not going to be any rain in Argentina, and it's going to be hot, it's going to be dry. Now, starting next Thursday or Friday, there starts to get their first bout of rain, and then the following Tuesday, they're supposed to get another follow-up rain. So we need to see those in the forecast come Monday to keep this bean market, which is down 7 cents for the week, keep it down around the lows of its range. So that's basically all about weather right now. Over in the wheat, like I said before, the wheat moved very aggressively this past few weeks. It has seen about 50,000 shorts being covered, which equated to about a 30-cent rally in the wheat. Now, we'll see if they have more to cover or not. Wheat saw its first good to excellent ratings coming out of dormancy, and they were terrible in Kansas, which is the majority of the wheat area. Now, we'll see on Monday if that continues to deteriorate or if it's just stabilizing. The thing to remember too is that these January reports, or this last January report, really is not very well correlated with final yields. So a lot of things can happen. We could see a lot better crop down the road. Kind of seems like dormancy down around that Kansas or excuse me, Dallas line. You've got to see some rains there by about mid February, and then by March 4th or 1st, you've got to have those rains get up into that Kansas, Oklahoma area to help the wheat coming out of dormancy, as long as it stays there and it doesn't come out early. And then that would definitely help the crop. So there we're focusing on the plains weather, and we'll see how that materializes down the road. For all these products next week, we do have the supply and demand report out on the 8th. So the government will give us estimates that day. Over in the livestock, solid gains in the livestock this week. We saw last week the Packer came out on Friday afternoon, gave 126, 127 for cattle. They were aggressive and came out early in the week, 25, 26, 27, bought up cattle, and then basically we're done buying cattle by about Wednesday. Now the board has gone up to that 127 area basis the February, which will be first notice day on Monday. So we've seen the delivery month basically trade right where the cash is. The problem we're seeing though in the cattle market is that our products are not going along for the ride. Boxes this afternoon were down about 50 cents. Select was about 209, and the choice Select was about 204. And we're not seeing the load count out there that's needed to push this product forward. So we really need to see products trade over 210. Right now, without those products over 210, Packers in the red. He's losing money, negative margin, and that'll make him step back from purchasing down the road if it stays that way. So I want to keep an eye on that. Now, the positive for the livestock market has definitely been the export market this first month of 2018 and first week of February. Great export sales for both pork and beef, and that's due to that lower dollar out there. The dollar had been getting crushed, and that had created, that means that our foreigners, where the foreign markets have more buying power, dollars cheaper, they can come in and purchase more for less, basically. So that's helped out the pork and beef industry. We'll see if that lower dollar stays that way. Today, it did not. The dollar increased in value, the dollar index overall, and that's twofold. We had an FOMC meeting this week, and we saw that they were a little bit more hawkish than people had anticipated. So then everybody's looking at today's non-farm payrolls to see if those are solid numbers, because if they are solid numbers, that would go with the hawkishness of the FOMC. We were looking at 175,000 non-farm payrolls. It was 200,000, so better than expected there. Also, we're watching the 10-year note market. The 10-year notes are dropping, prices dropping. That means yield is going up. We're at 2.8 on the yield. That's the highest, I believe, in 3 years or so. So you're seeing a little bit of a change in direction of these markets, and that's where we're starting to see the dollar firm up, and now stocks come off. Bloodbath in the stocks today, over 700 lower in the Dow, 60 lower in the SPOOs. A lot of it is due to the earnings that have come out, but there's also reason for this market to back off. It's been on a tear, and you're only talking about a 2.5% down day as of yet. So we'll see what the weekend brings, and if investors have a clearer mind on Monday and come into this market. As far as energies are concerned, crude's 60 to 70 right now. You're really seeing frackers step up and hedging prices out there as we got to that 70 level. They're getting ready to come online. They start thawing out in the Dakotas, and all of a sudden we're going to have a rush of oil. Also, this week was the first week in 10 weeks that we saw oil inventories increase. So that was kind of a change of the guard there too. So not saying that we're going to go directly down to the 60 level, but you've got a stock market that sold off a good percentage today. You've got frackers that are going to be starting up better supply here in the next 2 months, and you've got a chart pattern that is starting to tilt a little bit in the crude oil market. So I look for a correction in that over the next couple months. As far as next week's concerned, once again, let's see what happens with the stock market if people step in and this was just a hiccup and then they want to buy discounted shares. Also next week, February 8th, we've got the supply and demand report out of the USDA. We'll see what their estimates going forward are there. And then also you want to look at what seasonality or what seasonal trades are going on out there. Now, beans were supposed to be a buy on the 1st of February and then a sell toward the middle of February. We'll see how that works out. Right now, it doesn't look like it's gonna happen. Corn typically rallies in the first half of February and then sells off in the second half. Remember, we are in the insurance month for corn pricing right now. And then wheat is going to be a sell halfway through the month too. So those seasonalities may come into play as well. But that has the wrap up for the first week of February. This is Brad at BIS Commodities signing off.